प्रबल जब पैरों में भरी, फिर क्यों रहूं दर दर खड़ा जब आज मेरे सामने है रास्ता इतना बड़ा। जब तक न मंजिल पा सकूं तब तक न मुझे विराम है। जब तक न मंजिल पा सकूं तब तक न मुझे विराम है। चलना हमारा काम है, चलना हमारा काम है। On this note, welcome to the pre-market analysis of Nifty 50 for 13th of January 2025. Currently in this market, we had a conversation last time that this market is going to be favoring the buyers, not really the sellers. Obviously, you could have sold calls, made profits. That can be one of the ways. But for those people who are safe sellers, who sell the strangles, sells the resistance and the supports, for them it was not really a good market. What we understand right now is that this market is currently at a level which is very dynamic. Dynamic, that means market can move either ways again. This market, a lot of people are claiming it to be a crash, a lot of people are claiming it to be a correction, and a lot of people are claiming it to be a buying point. Now, there are a lot of people, and 93% of those people are not making profits in this market. So, you should be listening to none because you are that 7%. You will listen to yourself, you will be your own indicator, you will be your own news. Do not adhere to all those news that you're hearing around. It is going to be a huge crash market is going to reach 20,000. It has just reached 40% of its downward potential. 60% is still left. Do not give heed to these important things because these are not important at all. Now, the idea is to simply understand the levels. This market will only give you money and only facilitate you with profits when you understand the important levels. If you are walking with the market, if you are in the journey same as the market is, then only you will be able to go with the market, go with the trend, understand the trend, rely, be confident. Everything will come only if you go with the market. Now, if you try to go ahead of the market might ditch you. The reason why I have been saying this for a long time, and I'm saying this to you guys right now, because this market is very incredible, beautiful, very sophisticated, and very proudy. The reason why I say this because this market, what we see around, it's trailing around 23,400 something, Nifty 50. People are assuming it can go to 20,000. People are assuming that this is a very great buying point. It can go to 25, 26,000 again in 2 months. What you should do, stop assuming. You should stop assuming anything that you think are being assumed. Watch out these levels. 23,350 is going to be an incredible support point. 3 times there have been support for that. In between of 22nd of November, I guess it was one of the important levels. Look at it here. This is a 15-minute time frame. We have been discussing about it for so long that why I prefer 15-minute time frame over 5-minute time frame and 1-minute time frame. Here what we see, and the most important thing here is what we see, we'll go to the higher time frames. For example, 1-day time frame. We need to understand what the market did last time when it was here, wherever the market is. Now, this is basically understanding the price action, how the market actually reacted to the current point last time. The market was here last time, or nearby here last time was here, this point, which was 22nd, 19th or 22nd of November, between that point. And again, uske pehle the market was near this point again around, I think, 4th of June. 4th of June and June times. Now, the idea is to basically understand how the market reacted. The market reacted in 3 different ways, right? Here, the market changed its character. Now, what is a change of character? Whenever a market is going through a long higher highs, higher lows, lower high, lower lows, a long prolonged time period, and then it breaks its own structure, then we call it a change of structure, change of character. Now, when the market does it for a shorter time period, we call it break of structure. These are important time terms that I'll be discussing here again in upcoming videos. You need to understand this right now. Think it as very alien subject to yourself. Now, we'll make it very much familiar to you. Understand what the market did here last time. The market was here last time and the market gave basically a proper hammer. This was for 31st of, I think, 31st of May. Here the market gave a proper hammer and the market went down. Basically what you see here, the market went up higher high and went down, and this was a tragedy to those people who basically bought in this market, who thought the structure has been broken. They were bamboozled. What you would have done here is understand only levels. Understand only levels. Here you would only understand levels and nothing else. What you would understand here is now the market reacted this way, and again the market for I think the next 3-4 days market took just 2-3 days to just get this support, this resistance to become its support. Now, here till here it was a resistance. Market broke this level, became the support here, important support, a support which was not challenged for the next 5 months. Then the market basically gave a retracement, came back to this level again. Here the market gave a proper support, a lower low, break of structure, made a lower high, and then after market made a consolidation point. Ups and downs were there, but it was a consolidation point. Now again, after 2 months, the market is again challenging the point which it challenged around 22nd of November, and before that it challenged it around June. Now, 3 times we have seen this level to be tested properly. Right now we have to see and we have to observe how the market reacts. Now, understand why I'm saying 23,300. The reason why I'm saying 23,300 is because this level, just observe this level, okay? This level here surpasses the current low of the market, basically the last 10 days low of the market, also surpasses the closing in a day time frame of what it did on 22nd of November. Also, before that, if you see, the market basically gave a choppy region here when it was around 11th of June in that level also. And then after the structure was basically broken above 23,300. What we need to understand here is this point of contention, which is 23,300, is a very strong point. Market can basically give a higher point here. It can again reach 24,000 anytime, and the market can break it and obviously come down to 21,800, 22,000 levels. It is very much possible. For us, what is more important here is to understand is the equilibrium is near around 23,400. The market people are, a lot of people are expecting the market to come down. Now, understand, expectations has nothing to do with the market. The market is derived from news. Market is derived from the money that has been spent here. Now, the operators at times derive the market. The situation of the global world derives the market, and the situation of the global world is not that hunky-dory. The current crisis, what is going on in USA, the wildfires, what is going on with the viruses, it is not really cool. Understand the bond yields, the INR, imports, forex reserve of India is not really doing great. You need to understand every small stuff. Now, the Statistical Organization of India has given a very poor news regarding what can happen to the GDP rate this year, which is 6.4% less than what it was last year. So basically, these news are not really important at times to the retailers, but very much important to the market. And we retailers need to understand what is important for the market. We at times surpass these news and think something else will come, and these things are not important. These things are only important because these things derive the companies of Nifty 50. They derives the sentiment of FIIs, the DIIs, the net selling and net buying of DIIs and FIIs. Now, this is basically connected. Everything here that I've been saying here for so long is connected to each other. We need to understand the butterfly effect here. Now, understand the reason why I'm explaining everything here is because the market is showing you a psychology. Understand this psychology. You do not be the part of the psychology. Be a third person. Detach yourself from this market. Detach yourself from your own body, and then try to understand this market. Okay. Try not to align yourself with the market. Try not to align yourself with those 93% people who are here, because this market is not for humans. This is not for us. We have to detach our emotions from the market. This is very much important what I'm saying here, okay? Try to focus, because I am. Trying to give my best, because you will also. Now, understand the resistance level. Market here is going to show a resistance around 23,800 because, and why I'll tell you. This is a 1-day chart. Market basically showed 3 downtrends right from 23,800. This level was very much important. I will tell you, this level is very much important, 23,800, because here the premium zone starts. Now, this level is basically a selling zone. People have been selling so much for the last 5 days here. For us, it is very much important that this selling zone becomes a buying zone if we really want to go and be bullish in the market. And if we really want this market to go down, then really expect 23,300 to be get done with. Okay, if 23,300 is getting done with, our next target can easily be to cover the fair value gap. We need to understand what is a fair value gap. We have to understand what is a fair value gap, okay? Now, fair value gap is basically the imbalances created by the market. The imbalances, that means whenever a gap is created in the market has a tendency to today or tomorrow fill up that gap in one way or the other. Now, the market has created a big gap from like half of 2024, and it could not cover the entire gap at all. The market has the potential to cover the gap, but there is no specification, there is no guarantee that it will this year. It can also do it next year. For us, we need to understand, we should have the knowledge of the fair value gap. It is that simple. Understand the imbalance that has been created where the market has not challenged its point where it actually went up. Understand here, the market basically went up from here to here without any challenge. It was a straight upside movement creating imbalances. Market could not correct itself. So basically, the first fair value gap here comes out to be till 23,700. If the market comes down, our first idea, our first profit booking can also start from 23,800. If the market sustains there, here it can be our support, and if we see a proper break of 23,800 clearly, then we can go for a bigger fair value gap. The bigger fair value gap can be at least till here, okay? 21,800. 21,800 can be our bigger fair value gap. Now, this is a huge potential. The market can do that, but the market can actually go up tomorrow. The market can start with a gap up. The market can go up, challenge 24,000, and then you people who are thinking that the market is going to go down, having prior notions, having assumptions about the market, can literally face a lot of big losses. Because of that, we people do not create a bias in this market. This market can do anything. You should be ready for everything. Now, you should be ready for 23,300 to be getting done with. If that happens, you go and buy puts. It is going to be a buying market. Do not sell in this market until you see a proper range. There is no proper range at all because before it was a range 23,500 to 24,000. Basically, there was a range. Now there is no range. Try to understand the levels, sellers. This market is going to be very dynamic. You are those people who wait and trust monotony. This market is going to give you less sideways momentum because it can give you a lot of volatility. Not good for sellers, not good for you. For buyers, if you are adhering to your discipline, your levels, waiting for a 15-minute candle to close before whatever levels that you have made, if you are following our levels, my levels, whatever I'm trying to give you idea of, then it is great. Wait for a 15-minute closure below that level or above that level. Above level is 23,800 and below level is 23,300. We have some idea about it. I am not really bullish in this market. I don't have a prior bias for it, but still I'm not really bullish for this market because of the global news. But if market gives me that opportunity, I might. This is all from my side. I want to keep it a very deep thought right in front of you that this market can give you huge losses if you don't follow discipline. This market can surprise you, shock you, and gift you if you are capable of it. Because most of the people, 93%, are not. Thank you so much, everyone. We'll meet tomorrow for our next pre market analysis. May Lord Krishna guide us through. Thank you so much.